Hi guys. Today we will analyze Meta stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Both the long and short-term trends are negative. It is advised to wait to see how this turns out. Support level is around $292, if it breaks, the next support level is around $250. Resistance level is around $335, strong resistance level is around $350. In the last month the stock has been trading from $290 to $350 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 20 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 36% per year, for last 5 years. We see that the average profit margin of the stock has been around 35% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 90% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Meta company: bad, average, and good. First scenario. Meta will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 20%. Future profit margin would be low, 26%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $240. The second scenario. Meta will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 28%. Future profit margin would be average, 30%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $413. The third scenario. Meta will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 35%. Future profit margin would be high, 35%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $683. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Meta is 13.97. Minimum rate of return. I will use 12%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. We take higher risk, so, we want to get higher rewards. For Meta, analysts forecast growth rate around 21.35% per year in next 5 years, and future P/E around 24. Again, I will use 3 different scenarios for Meta company: bad, average, and good. First scenario. Meta will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 10%. Future P/E would be low, 20%. In this case, the fair value of the stock today would be $238. Second scenario. Meta will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 15%. Future PE would be average, 22%. In this case, the fair value of the stock today would be $390. Third scenario. Meta will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 20%. Future PE would be high, 24%. In this case, the fair value of the stock today would be $624. As you can see, today the stock is fairly valued, $323, if we expect Meta's medium performance in future. It's a great company based on its fundamentals. And the stock is fairly priced. I own the stock and I buy it more from time to time. Company's strengths. Meta operates the world's largest family of social networking websites, including Facebook, Instagram, Facebook Messenger and WhatsApp. Facebook derives about 55% of its revenue from outside the US and Canada. While user growth has migrated toward developing markets, the US Facebook's home market is still its most lucrative. Meta is more resilient than other ad-reliant companies due to the secular trend of advertisers moving to digital from other channels. Facebook has expanded its role from simple interpersonal communications to become a broad-based news media outlet. Meta has return on assets of 23% and return on equity of 30%. This is amongst the best returns in the industry. Profit margin of 35% is amongst the best returns of the industry. In the coming 5 years, the revenue will grow by 21% yearly. Risks. Facebook continues to face withering press criticism and a daunting range of antitrust and other regulatory issues in the US and abroad. Apple's change to its advertising platform has become the most serious threat to Facebook. The company will be using substantial resources to adapt to the Apple change in the coming quarters, while also investing in a new concept called Metaverse. Facebook is almost entirely dependent on advertising revenue. If large numbers of users refuse to allow Facebook to use their personal data, the company's advertising could become less valuable. Competition in the internet space is intense and Facebook is up against a number of larger companies with greater resources, including Google, Microsoft, and Apple. Like any fast-growing tech company, Meta must successfully manage its explosive growth trajectory. It must also ensure 24/7 system reliability in the face of computer network attacks. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.